all of us know, hopefully me, but Jerry Sanchez, and this is the Carolina Multifamily Connection. I actually celebrating with this meeting, we'll be celebrating my 2-year anniversary. I started
Wow.
in 2020.
Congratulations, Jerry.
Yeah,
Good stuff, man.
I always remember the advice because I was looking to start it, and Jason Yarusi was one who was just like, just do it. And I didn't overthink it. I signed up, I put it together, and we started. My first guest was Bill Coyne of Park Capital, and he came on, and then he started it, kind of reaching out to guest speakers after the beginning of January. But the reason for putting this together was just basically being, since I'm out of state and I want to invest in the Carolinas, and I was crashing during the COVID time, all these different meetups that were in Asheville and Durham and Charlotte, but I knew they were going to come back, in person. So what's going to happen? So that was my reason for doing, this, and it's been a great source of connecting with people and, finding boots in the ground partners for those that are looking, to work. So that's, how the genesis of this. But yeah, I thank everybody who's been part of it for those 2 years. But so for today, I wanted to be very, informal. And as the year goes by, you just realize, we all come in with goals, and we all come in with aspirations of what we're going to do for the year. And sometimes you hit them, sometimes you don't, but no matter what, you're making progress by being active. And I kind of want to just reflect on the fact of the positive wins for the year. And it could be as small as being here tonight, or it could be, 100 units that you did, but it's all positive. And kind of think about, what are going to be some of the goals for the next year. And then the reason how we usually structure this is do a breakout room at the end. If there's enough of us, we can do 2 rooms and maybe use that opportunity to connect with each other and hopefully, form some partnerships. So again, thank you for everybody who's coming. So why don't we go around the room, but I'll start first. Keep it simple. I'll say, think of, one win that you had during the year that you're very proud of, and then one small goal that you're thinking about for the next year. And then, we'll kind of open up for like a wider discussion. So for me, I would say my one, I have, a few wins, but one that I am actually pretty excited about was I started my first limited partner investment with January of 2020. And that deal ended up being a tremendous experience, because I learned from there the power of really the compounding of being of an investment. Because about a year and a half later, the deal refied. I received my capital back, and I put that into another deal. So the operator went into another deal in Florida, but I still had ownership in this original investment. And then that actually finally he sold the product last month, and now I get additional funds, which I'm rolling into another investment. So obviously it's not always that easy, but it was just an awesome first experience. And I think, an understanding of how these things can grow and compound. So that was my win. And my goal for the next year is to be a lead. And when I say a lead, I don't mean I have to be the person that runs the deal, but very involved in a syndication, a smaller syndication where I'm doing it with a smaller group, maybe something like this. The 6-7 of us get together and bring down a deal with each of us bringing our own, investors into it. That's my goal for 2023. So with that, I'll let anyone else who wants to go next, or I can just go in order on my screen, however works.
Go in order.
All right, cool. So then with that, actually you're up.
Okay.
All right.
Yeah, so William, I'm in Charlotte along with Twee and Gonzalo and Ted. Marcus, where are you located? Are you?
I'm in New Jersey.
Okay. Yeah, so I had a property that I acquired in 2019, a 37 unit that was sold in 2021, and then rolled those over into 2 other deals, an 84 unit in Charlotte and a 72 unit in North Augusta. And then so those have just celebrated their kind of their 1-year anniversary this past year. And this summer, I served as a KP with some guys doing a 32 unit in South Carolina. So we picked up a new 32 unit to our portfolio. But admittedly, I've not done the best job of establishing broker relationships and trying to get into the inner circle, if you will, of getting the chance to look at deals before they come around. And by the time they do the email blast out to tens of thousands of people, I'm just one of, right? And so, and the deal more than likely isn't going to work, right? But in the environment we've been in with 1031 money being thrown at deals and the economy and virtually free money, it's been hard to make deals pencil out unless you can find them off market and get direct to seller. So my goal next year is to start to try to find a way to get closer to the sellers and try to get deals that are off market and not just through brokers. But of course, with the economy changing, I think broker deals, instead of all them trying to sell and price them based off of 1 and 2 year pro formas, I'm starting to see some that are actually priced based on actuals, and haven't seen that in a while. So that's encouraging. You're muted, Jerry.
As I think about this, if you don't mind, because I'm assuming that we all know each other, but that's not the case. So give, just a quick 1 minute, spiel about yourself.
So I had a business with a business partner for 24 years. We had several businesses and we sold those in 2015. And so we sold business management software systems and CRM software systems. And so I went to work doing W-2 job, doing project management work in the same line of business for friendly competitors, and that for a number of years. And then Vicious started trying to plan for what does the runway going to look like at or after retirement, and didn't want to get caught like a lot of people did in 2008, 2009. So started, what other alternative investment vehicles can I find other than just stocks? And so I picked, ultimately through a lot of deliberation, a lot of research, and a lot of education, multifamily real estate. Looked at a lot of different real estate asset classes, but for me, at my stage of life and what my goals were and what I needed to achieve, multifamily checked the most boxes for me. So we started, me and my wife and I, we consolidated. We kind of had what I call the sock drawer of retirement investment accounts. You start a Roth here, or you start an investment account here, or an IRA, and you have an employer, and you create one there. And then some are orphaned. So we consolidated a number of those into solo 401ks and started doing LP investing in 2018 into other people's deals. And really, that was about the time I really started trying to figure out what I wanted to do. But that gave me some insight into how deals are put together, what to look for, how they're operated, how they're run. And so, and to date, we're probably in 10 different deals across, I think, 5 or 6 different operators. So some of the operators, I'm in multiple deals with them. But to date, all of our LP investments are through our qualified retirement funds. And then the 84, the 72, and 32 are in out of our personal portfolio, out of personal funds, outside of retirement plans. So the GP stuff is with personal funds, and the LP stuff is with retirement funds.
It sounds like a similar way that I'm at also. I started self-directed IRAs with the LPs, and then looking to do the GP work with the fund. So great. And the deal that you exited out, was that the one in Fayetteville?
It was, yeah.
Cool. Awesome. All right. Well, thanks. We'll definitely come back and have an open discussion, but I appreciate you jumping up first. Ted, are you able to go? Because I think you mentioned you might have to cut out, so I may have you go next.
Yeah, that would be good. Yeah, my wife is driving now, so I'm no longer driving. I'm originally from Long Island, New York, moved down to 20 minutes south of Charlotte. I'm in Indian Land, just over the border into South Carolina. I retired so I guess that's my win. My win is I made it through a 31-year career. I retired in February.
Congrats.
Yeah.
Thank you. Done with my nights and weekends. happy to meet you all. I really enjoy this year that, since I retired, I've been doing a lot of research on investing and real estate, meeting a lot of cool people like you all. I guess my goal for next year would be I'd love to follow a deal from beginning to end, from acquisition to financing to rehab to stabilizing. And, it looks like it's in motion already. Like I said, meeting a lot of cool people. Yeah, that's about it, I guess.
Yeah, just out of curiosity, is your spouse Maria Caputo by chance?
No, nope.
Okay.
Yeah.
I happen to know a Maria Caputo, and I think was in Indian Land at one time. So that was going to be interesting if it was.
Yeah, it's a more common name than I realized. Yeah, as I grew up, no Caputos. So yeah.
And you also picked up a property in North Carolina, right?
Yeah, so we have a 2-bedroom condo right on the beach in Oak Island, North Carolina. It was our first venture. It's like an Airbnb vacation rental. Property manager was not really doing the right thing, so they're going to be fired next month. I'm doing some of the rehab work myself, flooring and stuff like that. I'll have a guy painted in January, and then either we'll take it over full time or find the right property manager for it.
Awesome. Well, yeah, I appreciate you coming out, especially I know because you're running in and out and around. So thanks again.
And actually, I'll be in New Jersey tomorrow morning at 9:30.
Oh wow, coming in through into Newark, I guess.
Yeah, we'll find it to Newark. We'll be in Jersey Friday, Saturday, and Monday, and then Long Island on Sunday for some hockey stuff. So.
Okay. Where are you staying in New Jersey?
Well, I'm going to go back and forth, unfortunately, to my mom's in Long Island. So I'm not staying in Newark. I'm just going to go. Yeah, we'll be at the Devils game on Saturday and some hockey on Friday and Monday, and just commuting over that bridge a couple of times.
Awesome. Yeah. Well, it's much more fun when you don't have to do it for real every day, right?
Right, for sure.
Cool. Well, thanks. All right. So next up is I think I see Ahmed. I don't know if you're still on. You're next on my screen.
I am.
Cool.
Good evening, everyone. Thank you, Jerry, for having us all on this beautiful meeting. Happy holidays to everyone. And just a little bit about myself. I own 3 apartment units, 3 apartments actually in New York, Westchester, Hudson Valley area. And I was drawn into this real estate venture because of my old job as a business banker. I was doing small business banking for a while, for almost 15 years. And many of my clients were investing heavily in real estate and multifamily. So I got drawn into that, and I ventured into, throughout the pandemic, I took a leap of faith and paid for education to understand a little bit about syndication. And that was a huge light bulb, that came on. And if you don't take the next step in action to understand real estate, you'll be stuck for a while, So I was very active on Bigger Pockets, attended a lot of sessions, and met Jerry online with, Charles Sessions and stuff like that. I got involved with the community of real estate investors and syndicators. I think my biggest win for the year it's not a monetary win, actually. It's rather a social and business win, which is being part of this amazing community that me, Jerry, and the guys have built together and we are part of. To have that support system has been one of the biggest wins of this year, to be honest with you. I've learned so much from these guys, and they've been extremely supportive, and I reach out to them all the time. We support each other 100%. And I think you cannot put a value to that. If you have a support system and an ecosystem that you belong to, it's beyond what money can actually bring you, because this will give you the way to make more money in the future, So there's no value to it. So that was my biggest one. Beside that, I did involve in syndication. I started with an LP on a 43 units in Alabama. Then I told Jerry that I want to be active or semi-active on a deal, and me and Jerry and another partner, we co-GP'd on a deal, 70 units in Jonesboro, Georgia. That's Atlanta MSA, which was an amazing eye opener for me and great experience, and just last week or 2 weeks ago, I am an LP on 49 units in Pennsylvania, and that's going to be an action of syndication on 50% long-term rental and 50% short-term rental. But the beauty of this deal is you're going to get all your money back within 2 years and still have 2.5% ownership on the venture. So it's like it's infinite, return almost. I have submitted an LOI recently on a 5-unit deal in upstate New York, Greenville, upstate New York, not South Carolina, unfortunately, Jerry. But me and Jerry, we always talk to brokers, and we keep active looking for deals and underwriting deals. And I also started doing, capital raising a little bit on the side, and I want to strengthen my, forte on that, basically, because I have my relationships back in New York City and around California, and I know a lot of professionals and bankers and stuff like that. So when I start investing as an LP in syndications and I'm start seeing the results, it's like an eye opener, because I was a banker working in the bank, and everybody tells me I have to go to see the financial advisor so he gives me the money, and you cannot control it until you retire, right? And it never made sense to me. I never really understood the concept, so I never did it. I just have a 401k account because I had a matching opportunities from the banks, and that's like, great return. It's a matching dollar for dollar. But beside that, I never liked Wall Street or investing in Wall Street. I never did, So when I saw the real investment as an LP and in real asset that you can actually, tangible asset you can see and feel, and the returns, you can make almost 15 to 20% returns. I got really excited about it, and I started talking to my family and friends about it, and we're getting some really nice leads of LPs trying to invest with us in the future. My goal for next year, I think I want to go to the next level in syndication and maybe find a deal and raise the capital as well. So maybe want to be involved, maybe not be as a KP right away, but I want to be involved in a deal from the start to end. I'm still strengthening my abilities in underwriting, because I underwrote small lines of credits and deals, nothing commercial or big in investment, basically. So the way we underwrite things in the investment world and multifamily is a little bit different, actually, what I did before for 15 years. There's a lot of similarities, of course, but we never use a cap rate, for example. There's something I have to understand now. And there are several cap rates you have to understand. So it's very interesting for me. I love talking about it, and I get a lot of support even from Jerry. Sometimes I talk about what's a cap rate, and he understands finance more than me. Thanks to my wife, she's a finance major too. Jerry and my wife have a good team for finance here. So that's what I want to do for the future. It's been a great year. Happy holidays, everyone. Great to be here.
Thank you. Ahmed, the Pennsylvania, where is that? Is that Poconos?
Poconos deal, yes.
Okay.
And the great deal about that, it's zoned commercial. So even if the regulations actually change one day, they still have the right to turn it to an Airbnb and still be protected, So
Right.
it was a very sweet deal. When I saw it, I was like, wow, this is different from the syndication stuff that we do, which is a whole between 3 to 7 years. Usually it's about 5 years. This is within 1 year, you're gonna refinance from a bridge loan, and you get almost 50% of your capital injected right away. Then you have the cash flow coming in for the next year that's going to give you all your capital back, and you're still earning money after that, which is really, really awesome. So I didn't want to do an LP. I want to be an active investor. But when I saw this deal, I was like, this is great. So I jumped on it right away,
Yeah. Awesome. Yeah, that's awesome. Yeah, I mean, I think, as the more we dive into this and the more we're involved, William mentioned, like, it's a combination of, combination of passive, a combination of active deals that gets you to where you want to go. So that's awesome, man. Thank you.
Yeah, you know, when I'm new to syndication. I started the business with you guys January 5th of this year, actually. So I think the accomplishment that I have gained this year was tremendous, to be honest with you. Just the knowledge and the connection and the relationships that I have. And yeah, at one point, because I do have the capital, I want to invest. And at one point I even offered you know, risk capital. If I can offer risk capital just to be a part of the GP side, I was okay to do that if I knew the team very well, you know. But things changed, you know, and we put offers on deals that didn't go through. Almost in Charleston, South Carolina, there was one deal involved with some partners down there, and we were about to, you know, close on it, and just the numbers didn't make sense because the rates start going up. We found some fallacies in the building, and we decided to pull the plug, you know? So it's always a good thing to pull the plug and say, you know what, I'm not going forward, you know?
Yeah,
Don't risk it.
some of the best deals are the ones you don't make, right?
Correct.
Cool.
Yeah, man.
All right, well, thanks. We'll come back around now. Oh, I see we got a new member. Yeah. So next up is Twee Tree. Hopefully I said it correctly.
You did.
Yeah.
I've had too many people butcher my name, so I've learned my lesson. Put it in the quote. You had my name right, Twee Tree. I just really am new to multifamily. I've been a real estate investor in the single family homes for off and on for a bit. And I used to work in corporate at one of the major banks here, and was in commercial banking underwriting. And so this commercial space seemed to be a natural for me. And I originally started out thinking I was just going to focus on single family homes. And then I just kind of slowly gravitated to that's just a lot of work. And then I'm moving it over to a lot of work, but just a lot more economies of scale. So my wins this year have been, I decided to start my own company this summer and then dive into real estate full time. And I did pass my brokerage license first time. And then I'm probably going to go affiliate with one of the firms here that deal with both residential and commercial. And the owners of the firm are also investors. And so it's not rare to see a broker and an investor together, but it is rare to see the owners of the real estate firm that are active investors as well. And they're not afraid of it, because I think there are a lot of brokers out there that are afraid of investing because we are held to very high standards. So my goal for next year is to get a multifamily property in place. I have the capital, but my capital is restricted because my husband works for Wells Fargo Securities. So we can't do self-directed IRA or self-directed 401k. And that is because of the restrictions on where we can invest in the platform we can invest. And it primarily has to do with restrictions on securities. But if the platform is there, then we're restricted on the platform. So that's why we can't invest with IRAs right now. But so we pretty much have whittled down our options to, we can invest in multifamily using our own funds. And I would like to be a GP, but most of the time, from what I'm hearing, you don't start out as a GP on your very first deal. As far as limited partner, I'm open to that, but I think I would rather use my IRA or 401k for that, and then use my capital for my own projects. But I am currently an investor in single family homes in Charlotte.
Yeah.
I do a lot of BRRRRs.
Okay. And you previously, so you said you worked in finance.
Yes, commercial banking underwriting, yes. For one of the major banks here in Charlotte. And so some of these commercial mortgage-backed security, those deals, those loans are pretty, I'm pretty familiar with that.
Awesome. Now the stipulation with the Wells Fargo, is it because the securities the IRAs are invested in Wells security?
It has to do with the brokerage platform that you could trade individual securities. And so we could actually trade, we're in funds, but we have the ability to trade our own securities. And
yeah,
It's slowly moving to the point where originally it started, oh, you can't trade this type of security specifically, this type of security. And now I think it's going to slowly expand to you cannot trade any individual securities until you get clearance. And that whole process is pretty long, but they just basically given us 5 different platforms to invest. None of those platforms will allow for 401k or IRA. And I
Right.
think that's just a way for them to control what you can invest
right.
for
And
arm's length transactions.
yeah, I work at a hedge fund and we're registered investment advisors, so I can't, my 401k is also locked up essentially. But I have previous IRAs that were sitting aside, so I was able to.
Yeah.
use that. But
Right.
yeah, and then even with those IRAs, anytime you make a trade, you would have to, but they did allow private placement, so.
Right.
But a lot of these also, the banks, they want to control because they want to keep you in their system, in their platform. So
Right.
that's another problem.
Right, which is totally understand. You don't slap the hand that feeds you because you could get into a lot of trouble.
Yeah.
One other thing that we couldn't do also is hard money lending. And so I see a lot of real estate investors that, oftentimes, hey, I need 60K on a rehab, 10%. Can't do that. And I actually don't want to do that, even if I have the capability. It's extremely risky. And I would rather use that money on my own deals, the credit default risk is too high on those types of deals for it to be worthwhile.
Right. Good. Well, appreciate you coming on, and we'll come back around and talk a little more. Next up is Gonzalo.
Hey guys, can you hear me?
Yes, sir.
Great. Yeah, sorry, I'm in my garage. But Twee, I think we met over at one of Adam Balzinger's
Yes.
meetup, right?
Yes. I haven't attended his recent one or upcoming one.
Yeah, he's got a one Monday coming up, Monday
Okay.
night. Yeah, anyways, yeah, my name is Gonzalo. I know most of the people here on the call. So similar story to Jerry. My first syndication that I went in as an LP, it was back in January 2021 as an LP. And back then I was just kind of looking into the whole model as far as like LP deal and all that. And it recently sold, I believe, a couple of months back. And that kind of gave me just like additional reassurance. I mean, I was always very bullish on syndication as long as you invest with the right operator. That's the key word there, because I did invest in one deal in Philly with some pretty dishonest operators that lost a little bit of money there. But that deal in particular, I got to know various operators in the Jersey area that I know and trusted. And then I invested with them back on our first LP back in January 2021, sold 3 months ago with a 2.1x multiple in like a year and 7 months. So right there kind of reassured me that syndication, even on the LP side, passive side, it's just a very good investment vehicle, especially when the stock market was doing what it's doing the last couple of years. So that was really cool. I really enjoyed that. And then the last 2 years, in 2021, we closed a 32 unit. And then this past year, we did a 12 and a 49 unit. So we're up to 100 units in Louisville, Kentucky. That's kind of our target market. And we're pretty happy to be at that level in that market. Now, granted, the next deal for 2023 goals for myself and my partner is to really go bigger, because as you guys have heard, the smaller properties under 75 units, they tend to be quite a bit of work. You can't hire a full-time property manager that kind of sits at the property and takes care of everything. You have to kind of divide up handymans and vendors. So it's a lot of work kind of just doing that on the smaller properties. But goal for next year is really to close on something, maybe 100 units or more in the Louisville metro area. So that's what we're looking into. And then locally, I'm in Charlotte. Like I said, I know a couple of guys here on this call, hopefully to partner with some of them on some deals here locally. And also, since I'm doing this full time for a year and a half now, I've been looking for some additional projects. So I started getting into land development. We have a 22 acre property just in Lancaster, South Carolina, which is about 40 minutes south of downtown Charlotte. that we're entitling it. We're bringing it into the city of Lancaster, and we're going to be pretty much getting it rezoned and getting all the permits ready for construction for, we're hoping sometime September, October of next year if everything goes well. So that's what I'm also working with a local partner here on getting that going and trying to play that development side of things. And that's for multifamily, and we're looking to put in around 196 units there. So that's my big goal of 2023 is to break ground on that project and then try to close on a bigger syndication in the Louisville market area. So that's a little about me.
Awesome, awesome. And you also relocated down there, I guess about a year and a half ago, right?
Yeah, it's been, man, time flies, right? It's been, yeah, coming up, it'll be 2 years in May next year. So it's been great. It's a lot of, it's just a different market, obviously, than the Northeast where I was up. There's some nice opportunities here. There's still some good positive population growth, job growth in this area. So I think it's going to continue in the Charlotte MSA for years to come. So pretty happy that decided to move it in this area.
Yeah. I mean, I'm bullish for the whole, really, the whole corridor, the I-85, I think all across down North Carolina, straight through. So, yeah, no, I agree. That's awesome. Just before I remember, use the chat, guys, to put in your information. The 3 little dots you could save. So you want to put in your LinkedIn or however you want to reach, that'd be great. I'm going to pass over Lawrence, who's he mentioned he's eating, so I won't bother him. By the way, I just had dinner with him this past Saturday. He hosts quarterly events, mastermind events, and he did one in Charlotte, I think, in the second quarter. And he did one in New York this past weekend. Previously, I was in Washington. So make sure you connect with Lawrence. He also has a weekly, and God bless him for doing that, a weekly meetup like this. And he's been doing that for some time. So that's awesome. Also looking in the Carolinas as well. So next up is Marcus, who's one of my New Jersey neighbors over here.
Hey, Jerry, how you doing? Yes, my name is Marcus Stafford. I'm a commercial realtor with Keller Williams. I just recently retired and started my new career in commercial real estate. Also, a passive investor and a couple of deals and stuff, trying to go on to be a GP. As Jerry stated, I met him at his meetup groups and stuff there, trying to get into bigger units, learning about bigger units and stuff. And in there, my win for this year was I sold a couple of properties and was able to now take that money and put it into some LP deals and looking to do bigger deals next year. All right. I appreciate it, Jerry, and thank you.
Excellent. So the properties that you sold, where were they? Those were local in New Jersey, right?
Yeah, they were local in New Jersey, yes.
Now you're here on this call. I know we know each other from also the New Jersey meetup, but are you looking to potentially invest in the Carolinas or
Yes, absolutely. And I mean, I had the intention of moving down there, waiting for my wife to finish up work and stuff, and eventually move down there in the Charlotte area myself. So that was one of the reasons what made me get on this call, to try to get on this call and the network there.
And so you just retired, but what kind of, were you selling single family or were you selling commercial?
In about 6 years, I was doing residential. And once I retired, I switched over to commercial. And now I'm doing full-time commercial now.
Awesome. Okay. And you were in the, what area were you? You were also like in the Essex County areas.
I was in Essex and Union County up in New Jersey.
Yeah, it's hot. It was hot. It's hot, right?
Yeah, it is.
Yeah.
Yes, it is. So
it's good. Well, I guess it's just hot everywhere. Now, again, I just mentioned, check out the chat over here. Gonzalo just dropped a note here. So we'll see who's up next over here. I think Lauren's still on mute, so we won't go through. I think there's just one more. Hey, Arn, are you on listen only, or are you able to chat?
I think I'm here. Can you hear me?
Yeah. Hey, Arn.
Yeah.
Thanks for
Hi,
joining.
Jerry. Yeah.
Are you in
Good to
San
see you.
Francisco, Arn?
Well, I'm from San Francisco, and the Niner game starts in about 10 minutes, so
Well
this
done.
might be a quick one. But no, I live in Greenville, South Carolina now. So Jerry and I are good buds, and I mainly just wanted to hop on quick and say happy holidays to everybody, and especially Jerry. So, yep.
Well, appreciate you coming on. I got my bourbon here. If you want to toast,
Here, I got a little bourbon too. So cheers, my friend.
so we were just at the tail end of everybody was just going around giving a minute about themselves and then giving one win and then one win for this year and one goal for next year. And since you're a 49ers fan, listen, there's not going to be much scoring going on in that game, so you won't miss much.
Oh, I know.
Oh,
Well, I don't
terrible.
care what the score is as long as the Niners win, and I look forward to playing the Cowboys in the playoffs. Okay, so I'll put that out there right now.
You've had a good year, so what would you be put as your biggest win in 2022?
Well, my biggest win on a deal that you helped me on was a 281 unit deal in Greenville, South Carolina, 35.5 million. Closed it in September. Got fixed rate debt, which I'm thankful for. So that was the big win, and quite happy to get it. It had been 2 years of concerted effort to get there, starting on smaller deals, and a big one came together, and we're kind of excited about it.
Awesome. And now what are you looking forward to do in 2023?
Well, like to do another 2 or 3 nice deals, as many of us in the multifamily space right now, we're probably a little frustrated because hard to find deals when debt is 7%, especially when you feel you got momentum built up. But just more of the same, keep working it. 2 or 3 good deals would be great. And then, of course, just operating the 5 or 6 we've got going. That's a focus. And I can say until a month or 2 ago, we raised rents. Every new unit we got that was vacant, we bump rents $50, $75, which I'm sure is the experience by many on this call. We've kind of made the decision now not to try to bump rents, that when we get vacancies, we'll just re-rent at the last figure, because we want to maintain occupancy, and we just think we're going to be in a little bit of headwinds right now. So we're kind of being a little more conservative and kind of choosing to maintain occupancy over trying to push the rent roll, where the last 2 years, the game plan was you push the rent roll. And so just continuing to operate the assets we got in a professional manner, and understand where we may run into a few little headwinds, and communicating that with our investors.
Awesome. So,
Yeah.
Arn is actually gave me my first opportunity as a co-GP back in 2021 now, June, in that 43 unit in Greenville, South Carolina. I first connected with Arn by listening to, I was at the time, this was COVID time, I was driving into New York every day. So I was listening to every podcast I can listen to, and I was searching anything that would do with Greenville. And I think you might have been on Whitney Sewell's podcast. And then I reached out to you, and that was, I think August of 2020, but an example of how, you also build relationships. And I think you had a deal where you were raising for in Easley, which is outside of Greenville. And that's how we connected. And then, funny enough, just to show how connections are made, I connected with another investor, Mayuk, who many of you know, and he's now part of our group. And it just shows, how we connect and build a wide circle.
And Mayuk went to Clemson, so he kind of has this upstate region of South Carolina in his heart. And I would say we've developed a personal relationship above and beyond the business, and that's been great. And it's the part of the business that I really do enjoy. So kind of my real estate sphere is also my social sphere, and there's not a big division. And I think most of us on the call feel the same way. We take pleasure in these relationships and friendships that we develop.
Absolutely. Yeah. So I think we went all the way around. I don't know, Lawrence, if you're available to say hi, or you're still unavailable, you can give me a nod. All right, I think he's still eating. So we made the rounds all the way around. I want to keep, again, very informal, since this is they kind of like a holiday spirit and get together. But one of the things we've been talking about is it seems like everyone here has a little bit of both experience as LPs and as GPs, and it's that kind of road to achieving the goal that you're looking for. But if anyone has any questions or even want to speak to that, that would be great. I know, Bill, William, you first started it off talking about how you were doing some of the investing. How do you marry that both between, LP deals and GP deals?
Yeah, so in my case, I started out this way, and we just kind of kept it that all of the LP investments are through our qualified plans, right? So my wife has a solo 401k, I have a solo 401k. And so invest in those. So as they throw off cash, or if there's a refi event, or they go full cycle, then we roll those funds as cash accumulates, and we roll those start looking at new deals. So I'm actually looking at deals all the time, because as we know, looking for investors, for LP investors, it's a timing issue, right? So is the deal that you have interesting to the person who's doing it, right? Are the proceeds and the cash on cash returns and the equity multiple targets gonna meet what their requirements are, and are they liquid? Somebody may have a deal, but I'm not liquid, right? Or when I'm liquid, they may not have a deal. So I'm constantly looking at the landscape, looking at deals, kind of figuring out which operators and sponsors I might want to work with when I have enough to place another tranche.
Now, since you've done this, there's a lot of discussion and talks about like, UBIT and different types of taxes within the IRA world. Are there any pitfalls or anything to worry about as far as investing with your self-directed IRA? So
a difference between a solo 401k and a self-directed IRA is that 401ks aren't subject to the UBIT tax. So that's a plus, right? But on both of those, one point I would point out to people is that there's some restrictions on what you're able to invest in, which makes the IRAs and 401ks ideal for doing LPs, right? So you can't have managing control of a deal, and you can't have the majority ownership of the deal. Right. So it's perfect for LP investment, but I wouldn't be able to take those funds and use it to be a GP on a deal. Right, and which is also why it's problematic in terms of dealing with joint ventures as well. Correct. Yeah. Correct. Yeah. And how about anyone else here who's done a little bit of both, investing as a limited partner, whether it's through SDRA or not? And I would, that's a huge untapped, and that's kind of where we were, right? We had the traditional custodians, Wells Fargo advisors or Fidelity or Schwab, whoever they are, right? The traditional custodians have a portfolio, in particular in a 401k, but even in an IRA, of stocks, equities, bonds, ETFs, mutual funds. I mean, it's all really public securities. And although the IRS allows IRAs to invest in many more things than that, for example, real estate and I don't know what they all are, art, coins, gold, there's multiple asset classes that can be invested in. They're not going to be available to you through the traditional custodian. So But my point is, whether you liquidate an account and totally transfer the entire account over into a self-directed custodian, and there are a number of them: Quest, Advana, American, Equity Trust. I mean, there's a handful of custodians that do that. But you don't have to do the entire account, right? So if you wanted to move 100K over and leave a balance over in your stocks and equities in the traditional account, you can do that. That allows you, or move 25K over if there's an opportunity to invest 25K as an LP in a deal, move that over and invest that, right? You don't have to liquidate the whole account. You don't have to go all in. We chose to go all in and move all of our qualified plans over. That's not true. I've still got a Roth and a small Roth, and my wife's got a smaller account that we didn't move over just for some other reasons. But we're pretty much 90%. We moved pretty much 90% of our stuff into solo 401ks, and they're using that to invest in real estate.
Awesome. Cool. Another item I was listening to everybody talking, there was, obviously we're all here for multifamily, right? But I did hear some, Airbnb. Gonzalo talked about the land. There's life beyond multifamily. So anyone looking at anything else besides multifamily in 2023 in the real estate world, I should say?
So I'll share that I've traditionally only done multifamily up until this year. As a matter of fact, it's been exclusively multifamily. But this year and this again was through an LP investment through my qualified plans. I did invest in a self-storage fund, and they've got 8 properties in that fund. And then also invested in a land entitlement deal. So that's a deal. I'm an LP in that deal too, but it's still real estate related, but it's not strictly multifamily. So.
And it was syndicated.
That was a syndicated deal, yeah.
Okay.
Hey, Bill, can I ask you a question about that land entitlement, LP?
Yeah.
So basically, it was basically, rather than being a multifamily property, they just, I guess the returns are based on them acquiring permits within a year of entitling a piece of raw property, or is it like through construction?
It's not through construction. Now it could develop. They'd have to do a bigger raise, but the way they structured it was it's a fixed return for the LP regardless of how it gets, the price that it pulls. So it's gonna be, for example, the anticipated, the target is to have it turned within a year, and it would be a 30% return to the LPs, and anything over that goes to the GPs.
Understood. Okay.
I won't say it's fixed, it's capped at 30%, and then anything over that goes to the GPs.
I know if anybody, we talked about obviously about Airbnb. I know Amit's involved. Ted mentioned he has a property too. Anyone else looking at any any other short-term rental properties? I'm potentially looking at.
So right now I have a long-term tenant in place.
Okay.
But on one of my properties, the location is in the next year or so, it's supposed to be developed into kind of like a newer artsy kind of area. And it seems like the midterm short-term rentals have been doing pretty well. I prefer to do long-term rental because it's easier, but from what I'm hearing, like the cash flow is better on a midterm. So we just have we have a lot of people that come into the city to do contract work, and I've done this in the past where I provided a fully furnished apartment and everything's included, and the return was very, very well, very good. So I might turn that long-term into a midterm or even a short-term rental.
And that's in Charlotte?
In Charlotte, yes.
Are there no zoning issues or anything that?
No, it's a quiet neighborhood. Not that I know of. I'm not really sure if anybody's doing a short-term rental in that neighborhood yet. It's kind of an up and coming. There's a group out of Raleigh that's building out and developing a whole shopping center. And right now they have a independent movie theater, and they're trying to establish it into like a newer NODA or like an artsy area. But right now I have a long-term rental in there, and after her, I might consider moving it to a more short-term or mid-term rental.
What's the name of that neighborhood or that area?
So Plaza Shamrock. Plaza Midwood is like the really expensive single family homes. And then Plaza Shamrock is right next to it. Villa Heights is Plaza Hills. Those are like really hot areas, but it's still developing. There's a lot of development there.
I got
The Plaza Shamrock is a little more affordable, I should say.
I've been learning a lot about Charlotte recently.
Yeah.
I did learn about that downtown is uptown.
Yes. Yeah. They when I graduated college, I think that was right around the time that they changed downtown to uptown. I grew up here in Charlotte all my life. And they changed the name because downtown Charlotte was, boarded up homes. It was terrible condition. So by the time I graduated college and started working, all of a sudden it's now called Uptown. And I could still remember, just going down a few blocks and you still have, homes that were boarded up, and you have a massive Bank of America tower, and Wachovia was, and then right a few blocks down, you have boarded up homes. And so it's changed a lot. And I feel like by the time I finally started to reinvest in Charlotte, everyone outside of Charlotte had already invested in Charlotte.
That's, I think, a common, story with a lot of the cities. I myself, I grew up in Brooklyn, and like the year I graduated high school was probably like one of the most violent years in like the history of the city. And I just wanted to get out. So, I start working, I go in the city, and then I'm just looking to get out. And I fast forward to I'm working in the city, and one of, our coworkers is like, oh, I just bought property in, downtown area of Brooklyn, which was pre-Barclays. And I was like, whoa, that's crazy. Like, all right, well, and then boom, it's a whole different ballgame. So it's a common story across America.
And I would say some of the properties, as soon as like 2020, 2019, you could get some really good locations up close to uptown for like 50,000. And, I'm looking at this and I'm like, everyone outside of Charlotte bought it. And it's just crazy. And the interest rate environment, it just made it so much easier for them to just go in and buy it,
It's awesome. So how about finding deals? And then we're all obviously looking in the Carolinas and Charlotte, but is anyone, I know Gonzalo's obviously in Louisville, but is anyone looking at any other areas besides the Carolinas?
I'm leaving it open to the southeast. So I'd consider right outside Nashville, Tennessee, or even Nashville, but yes.
Yeah, myself, I originally started looking at in that area, but I never, just could never find footing in that. It's such a hot area in Nashville, and it's so competitive. I have a potential partner that wants to work in Florida, but not in the Tampa area, but over on the East Coast. And Florida is just hot in general everywhere, but it'll be more niche, smaller multifamily.
Yeah, I'm kind of like with Twee, and really the Southeast. I live in Charlotte, and I've got assets in North Carolina, South Carolina, but on the LP side, it's from Texas, Atlanta, Georgia, Florida, this Southeast Sun Belt, right? I would consider Phoenix, Arizona area if something to work with. That's, a hot market right now. And I think the Indianapolis area is probably not bad. I've seen some LP deals that were in that region that looked very intriguing. I haven't done anything with them yet, but I wouldn't hesitate.
Yeah, actually, my one, I'm doing now an LP in Birmingham, Alabama. That's where the operator that I mentioned earlier that went full cycle, he's moving into a property out there. So not probably not an area that I would have done myself. But since this is an example of where I'm investing with the operator. This is Anthony Scandiario of Red Knight. And so he's got a potentially good deal out there, but he also started in New Jersey, then Pennsylvania, and then ended up in Florida, and now this is the first one. So it's a common theme. It's Southeast, but I did actually, when I first started looking, I did look like in the Huntsville area, which I think is common that people end up being attracted to Huntsville. I know Lawrence looks at Huntsville, and a few people, but it's not a lot of inventory and is very competitive over there.
Hey, Jerry, a question for you. So I do hear of certain operators that as GPs, they operate in very different cities, like far away from each other, right? I'm guessing that they must have local partners, boots on the ground, that are also GPs assisting with that. I mean, they're not just going to go to a city that they don't live in, they don't have contacts, and just give the deal to kind of a property manager to take care of.
Yeah, I think it's true. What I know in that particular case, like when Anthony first went out to Florida, like they did have a relationship with the property manager in the other deal that was part of the property management team. And I don't know in this particular case, but also if it's large enough that you may just hire your own personnel and still manage it from afar. So I think it depends on the situation, but if you're GPing with another local operator, then you're leveraging off of their local contacts.
Makes sense.
Now, you have multiple properties now in Louisville. Are you using the same property managers on all those deals?
Yeah, I guess where my question kind of stems from is that when we bought the first one in Louisville, we didn't have local boots on the ground other than the property manager, right? Like they were local and everything. So that's one thing, but they weren't our partners in the deal. They really have no vested interest in it. They're just there to make money and, take care of your property, but you still have to do a lot of oversight with them. And then we purchased our second property with partners that lived in Louisville, have property in Louisville, and they're actually our GPs in the deal. So I'm seeing the difference where the second property, those guys are there at the property a lot of times. They want to make sure that this thing is running operational efficiently and things get taken care of, versus the first property where you don't have those people that are a little more vested. Do you know what I mean?
Yeah. I would agree that the preference would be, an operator that's boots on the ground and has that.
Right.
I'll look at on this call, Arn is like that, for example, he's in Greenville, so he has his partner who's also a property manager, as an example. And so, if you're investing with him in that situation, you would have that it's comfort that, the asset manager and they're also there on the boots on the ground as well as the property manager.
Yeah.
Yeah, if I could jump in, I mean, I would say, as we all know, property management is really, really, really important on every deal, right? You have a good property manager, the deal's probably going to go well. If you have a poor property manager, you're probably going to struggle. And what you see with a lot of the big operators, Rise 48, Whitney Sewell, and I think even passive investing, they tend to go to in-house property management, vertically integrated, and there's kind of the commitment to the deal. I think also the communication's better. There's less kind of layers of bureaucracy that you have to go through. And I think there's something to be said about the person who's running the day-to-day operation has some interest in it, has a vested interest in the property performance above and beyond the property management fee. So I would agree with the other people on the call that that's very important. With Brian and I, we're never going to merge our companies. So we're not going to be vertically integrated on a technical level, if that makes sense, but we're equal partners in the GP. So from a practical sense, we are vertically integrated because we're equal partners. And I can tell you from my experience, not being the guy who deals with the day-to-day stuff, I really love and appreciate that my partner, who has as much skin in the game as I do, is the one dealing with the day-to-day stuff. Now, of course, he's compensated for dealing with the day-to-day stuff above and beyond the general partnership. But the truth is, as a general partner, I'd have to pay anybody property management. So I'd rather pay the fee to somebody who actually has his own skin in the game. So I think, and I think the other thing, Gonzalo and I have talked about it, I think anytime you go to a new market, there's going to be a little trial and error, right? You can interview property managers, and I kind of call it the dog and pony show, and everybody's going to tell you how great they are. The truth is, the proof's in the pudding, and you're only really going to know by their actual performance in the job. So I think some kind of trial and error while you go to a new market to find the right team is quite normal and quite regular. So I think that happens all the time. And I would say if you can find a way to have the property manager come into the GP, I think that's a good way to go.
That's a great overview, Aaron. I agree with that completely. Based on the little experience that I have in the Louisville with 3 properties, and the same holds true for vendors. As you're going through vendors that you're using to do fix the day-to-day stuff, you're going to go through 1 or 2 that suck until you find that third shop that does a great job, and that's the person you keep. So agree with that.
Yep, 100%.
So I think, Bill, what was your experience in Fayetteville? Because I think if I recall, you did give us the information on your property manager. Did you have a good experience? Oh, you're on mute.
Sorry, I muted earlier because I had to sneeze and I forgot to unmute myself. Yeah, so I chose not to keep the property manager that was in place, and I was really scared about not being able to do that. I mean, that was the first multifamily deal that I'd really taken down, and I felt like they knew the property, they knew the tenants, they knew the market. I didn't live in Fayetteville, and I really wanted to keep them, but we just couldn't work it out. We just couldn't make it work. Turns out, so they were managing that property was actually 37 units, and it was built by the same ownership group and developer that built 120 units around the corner. And they were because 37 units isn't big enough to have on-site management. So they're actually managing it out of the leasing office or the other deal right around the corner. And they were sharing and using maintenance teams in their leasing office and all that. Turns out after changing, we discovered some things that weren't really copacetic, some practices that they were doing. So I was glad that I did change. But to Arn's point, it's, you know, I had a business for 24 years with a business partner, and I went through this with vendors and employees. You know, you can be in an interview process and have multiple interviews with an employee, just like Ken with property managers, and people need a job, right? They're going to tell you what they need you to hear to frame themselves in a favorable light. But you don't know until you get them on board and kind of have a break-in period. And same thing with property managers. Turns out, you know, you do, to his point, the person who's going to be the person managing that property, not just the office or not just the organization. You know, and a lot of times you get interviews people, and you're speaking with the ownership group of the PM firm or the principal or a regional director. You know, who's going to be the feet on the ground? Who's going to be the person who's going to be there every day or managing the people that are going to be there every day? Those are the most critical people. And we did have a good relationship. In fact, I was making a note as I heard Arn talking, I owe her a Christmas card, even though we're not doing any deals or anything right now. She took care of us, and she treated the property and my money as if it were hers, and was very, very, very frugal. And but when we needed to do stuff, she would tell me, like, this is something you need to invest in. So it was a good relationship. It worked out well.
It's a good way of, it's a good thing you said that about treating the money. It's as it's yours, you know, because it's important. I work, I think it's a unique situation where I work for, it's a billionaire family, but it is their money. And it's different than like working at, you know, I don't know, Wells Fargo or JP Morgan, like just the way everyone, because you know, one of my biggest kind of jokes is like, you know, the principal will sign off on every check, every wire, whether it's a $20 million closing or it's like someone that comes in and cleans the fish tank. So like, you know, you get in that mindset that it's yours, and then, you know, you're not thinking just processing things and letting it go, like to get your job done, but you're asking, like, you know, why are we paying this? Like, why is this? Why did this go up last month? You know, and that's the kind of people that you want working for. But you also, to the point of the conversation, have to incentivize people to act that way.
Right. Correct.
Awesome. So here's another topic I think it just popped in my head because Bill, you mentioned about one of your goals for 2023 was to connect more with brokers and local brokers. What are you know, I guess, how's everybody looking for deals still? Is it a combination of talking to brokers? Is it direct, you know, mail, or you know, even dealing with, you know, or teaming up with other operators? What are some of the things that you guys are doing right now to find deals?
So yeah, I'm committed, you know, personally to try to develop closer relationships with the brokers in the markets that I'm interested in. But I'm also going to start looking for off-market deals. And to that end, I made the decision actually last month to invest in a CoStar subscription, just so that I can have access to the properties and slice and dice and meet my criteria. And it's going to be cold calls. I mean, it's what the brokers are doing. That's how they get listings. I mean, they're finding folks through talking to people, right? The property that I sold, that 37 unit, was a cold call from a broker. They found, you know, I hit their target, whatever criteria they were using. We weren't looking to sell. It was going to be a long-term hold, but it made sense in the market and in the space that we were at the time. So I'm going to try both, right? I'm going to try to get closer to the brokers and also try to identify opportunities to have conversations with people and try to identify some off-market properties.
Anyone else working on off, I guess, direct to seller or off market? I'll tell you, a little bit. I've done the same thing. We share a Reonomy subscription, so I did put some letters out. What I did was I targeted a particular neighborhood, and this is in Greenville, South Carolina, I didn't want to overwhelm myself, so I'm actually going up to part 2, which is I mailed. And then I'm gonna do a second mailing. And then we're gonna do phone calls. I don't know if Amit, he just jumped off, but he's gonna help me on that. My big issue, because I'm, in the office, so I can't do the calls. But I think it's tough, but I think, you have to do it consistently. I maybe don't have a large enough sample for what I'm doing, but I'm trying to get like a system and process where I have, you first of all, getting through and piercing through the LLCs is difficult. But it was actually kind of interesting because I sent a letter and I hit somebody. Arn actually knows these guys, their owners. I hit somebody that I knew. He was like, "Hey, next time, just give me a call." But it's interesting but I think it's tough because the brokers are doing this too. So uh, I will see. But then you do hear of stories of people that do get through. So I think it has to be part of your game, but you have to try to systemize it so that it's not overwhelming. Because I don't believe many people I talk to will ever say that they've done it a cycle. They've done it 4 times, 5 times, 6 times. And I think that's probably where the consistency is, that person receives your letter 2, 3 times, and then he decides or she decides to call you. So that's the part that I think is the more difficult, was being consistent with that. Oh, Larry, are you ready to say hi?
Yeah, hi everybody. I've been listening because I've dinner and putting the Christmas tree up. I'm a just tree, so I've been listening. There's a lot of information going around, which I could take notes while I was eating. So just to introduce myself, my name is Lawrence Laddie, also known as Mr. International. I'm here in New York City. I have a building here in the city, and I also have my primary residence, which I'm going to start renting out, use it for visiting nurses. I also have an Airbnb in my other unit also. It's just 2 rooms though. And right now I'm a contract for a unit in Greensboro, North Carolina. And I heard Jerry say this year was what I did this year was happy. My goal this year was to hold 4 mastermind dinners, which I did this year. I held them in Miami, Charlotte, DC, and New York City. Was this past weekend. I met Jerry for the first time. We talked to each other a lot. First time in 2 years, right? And I also have I heard Jerry say I also have a meetup every Tuesday night at 7 p.m. called Financial Independence to Small Multifamily Investing. And that's enough.
Well, we need your 2023 goal.
2023 goal. Today I had to take like a step back this week here because I've been tired like a year and a half ago. And I've been going since I retired. So this week here I just stopped for a second. And one of my goals is to hold my goals are to hold 4 next mastermind dinners. I'd like to have 4 properties next year. My areas of interest are Greensboro, the Piedmont Triad area, also Richmond, and also Huntsville, Alabama.
Excellent.
So my goals for next year. And also another goal is to just to increase my meetup to a high level and bring bring more value to my attendees.
Are you have you considered doing, because you have the quarterly masterminds, but are you any in-person ones in like, let's say like in New York, or where it's like a monthly meetup?
I haven't thought about that because that entails looking to pay for some sort of rent,
Yeah.
play fee, or having people drink. And I really thought about that. Plus, also because of the fact that my meetups on Tuesdays, I would want to I don't want to fill my plate because I heard you talking earlier about someone doing so much stuff, and what happens after a while, you get to me, I'll probably get burned out.
Yeah. No, and then ultimately, you know, the goal is also, you know, to invest and find properties and partners, and you can, yeah, it's a fine line, but no, you, I like your model of the 4, you know, quarterly meetups in a year. And are you gonna keep it, you're gonna keep in the same locations? Are you gonna do Charlotte again next year?
My cities for next year is going to be I'm just throwing this out, right? Especially it's going to be Houston, Arizona. There's hope this in the drawing, put it that way. So Houston, Phoenix, Atlanta, Philly, definitely New York.
Okay, awesome. I'll try to make the Philly one then.
No, I'm gonna tell you right now, New York's definitely when next year December it's gonna be New York. That's for sure. This is my hometown.
Yeah. Let me tell you, the train was packed on the way back home Saturday.
Really.
Yeah, New York is at
We're
least
back.
on the tourist side of things is kind of back to normal there.
Mm-hmm. It's back to normal. It's like nothing ever happened. Plus, don't forget, this will be the first Christmas from 20. Is it 20? Right? This will be the first Christmas. So everybody's eager to get out here, meet people and see people. And New York City is, I mean, it's crazy.
Mhm.
So thank you for coming, Jerry, and supporting me also for the dinner.
Yep. No, thanks everybody for coming. 5 more minutes left before we wrap up. Marcus, you've been quiet. I want to give you opportunity to say hi. If you anything you want to add or ask any questions.
I appreciate it. I was just capitalizing here off the knowledge and experience the folks were so kindly putting out here. And I just look forward to coming down to your area and to invest. And I appreciate it. And thank you for having this meeting.
Yeah, definitely. If you're ever going to take a trip down there, you know, let me know. I'll connect you, you know, depending on where you're going. There's a plentitude of people out in the Carolinas that are eager to connect. So I definitely looking forward to my next trip down there.
Absolutely. Thanks, Jerry.
Cool. Yeah.
I also want to say thank you, Jerry, again for having this meetup. I'd like to reach out and connect to everybody. Hopefully everybody's on LinkedIn. I definitely like to reach out and connect to everybody here.
Yeah, drop yours in the chat so that you can have it. You can. Any, good holiday plan. We saddle off. Any traveling?
We're going to Hilton Head after the holiday. It's supposed to be the week after Christmas in Hilton Head.
That's always been something I always wanted to do, is to go down to the beach down during the winter time. Are the restaurants still open or?
Oh yeah.
Okay.
Yeah.
That's good. That's good. This year I'll be local. I'm staying local, but I think I've been trying to. I do. It depends. I got teenagers, so it's funny because they don't want to do stuff. They just want to, yeah. And then I get it, right? So, you know, because I was like, well, why don't we just go, you know, maybe go somewhere upstate New York and stay like a night somewhere. But then when the time comes, like they literally just be like, I just want to sit in the house. So, and then I'm like, now
Yeah,
it's
my 14 and 17-year-old are exactly the same way, but
that's what I have. I have a 14 and 17-year-old.
we're making them go. It's like,
Yeah.
we're going. The family is going.
Yeah. But then, you know, what I find with the 14, it's good because now we can just leave them. So, you know, like, all right, well then, you know what? Mom and dad are going to go have dinner and that's it. So it's good.
Yeah.
Cool. Well, listen, everybody, I want to thank everyone for coming on the Thursday night. Appreciate everybody. Have a happy and safe holidays. Enjoy it. And let's get ready to get out there in 2023.
Yeah. Thanks for putting this together and hosting it for us. Thank you.
Yeah, man.
Thank you. Happy holidays.
Yes. All right, take it easy. Thank
Next
you.
time you're
Thanks.
in the area, just hit William and I up. Love to meet you.
Yes,
Absolutely.
yeah, we gotta set something up. We're gonna, next time I'm down there. I like Sean a lot.
Yep. All right.
Very good.
Bye-bye.
Guys.
Be safe, everybody. Travel safe if you're traveling.